Okay, so this training is being recorded now. So now, we can talk a lot about what are different kind of strategies, jump around different kind of indicators, but basically those are not needed. You don't need an arrow to tell you that the price is going to go down or the price is going to go up. So this is a very simple and very interesting strategy. Kevin's Wi-Fi went out. Me just yeah, okay, all right, yeah. So let's get on now. Uh, let's see the current movement of the market, right? Now let me draw a line here. Let me draw a line right here. Can anybody on the webinar tell me what that line I draw right there? Anyone? There are two lines there that I draw just now. What those lines are? Anyone? Come on, you guys know it. That's right. There you go. So, did I needed an arrow here to tell me whether my price is going to go down or not? No, I definitely not. This doesn't need an arrow. This only needs an observation of the chart. This is called as naked chart strategy and price action. Everyone tell you a hype about price action, naked chart strategy. This is basically what it is. Remove all these things and you can just see a blank naked chart. Just, make your chart the more, get into a bigger time frame of like 5 minutes is enough. And then what you can do is, this is not a good example to follow the support and resistance strategy. Why? Because if you see, the market has been trending from the 4th, which was like yesterday. It has been trending a lot. But if I go here, this will tell you that this particular chart was a very good support and resistance uh, zone. They had a very good support, strong support and resistance zone. Now, the other thing that I want to point out is, when you see a chart and when you do a lot, when you minimize the chart, and it gives you a lot more clearer support and resistance line rather than the smaller support and resistance line. So if you can see on this particular chart right now, if I can draw one support here, this is a support, one resistance here. Because what is a support? Support is, where you can rest your back, where you can rest your back and you can come front again. So if you are trying to go back, there is a support behind you, then you rest your back and you can take a bounce and you come back. So that is a support. What is a resistance? If you're trying to go off the roof and the roof is not letting you go off, that is called as a resistance. So this price tried to go down all the way down here, but it could not go. So, and it came back up and it started going back up. So that is a support. And this was trying to break here and it could not break. So this is a resistance line. Randy, no, what happened, Randy? They are support and resistance lines, Randy. So now to draw the support and resistance line, you cannot do it if you are trading 15 minutes, 20 minutes time frame. Then it is better you draw the support and resistance line on a 5 minutes or a 10 minutes chart. Like in this, you can actually draw support for 1, 3, 5, 15, 30 minutes, different kind of time frames. So, um, I like I have drawn my support and resistance here, this one and also this one right here. I have drawn my support and resistance here. So when the market moves along the support and resistance line, it's called as a ranging market. So this is what happens when the market ranges, that it goes, touches, comes back, and it bounces. So this is the range of 1.1159 and 1.10795. That's where the euro is ranging right now. That is the range of the market. But when the market follows a particular trend, if you see, where is my arrow? When the market follows a particular trend, now this is a trending market, means this is an uptrend, and then it started ranging. So what happened is it tried to break the support, the resistance at 1.1299. It tried to break this, but it could not break, and then it started ranging. Okay, then the buyers and sellers were like, all right, now we don't want to fight anymore. Let's just buy a little, sell a little, sell a little, buy a little, kind of thing, right? So they started buying and started selling, then they started buying, then they started selling. So that is what is happening here. So basically, you need to understand that when the market is ranging and when the market is trending. So now, to trend and range, don't worry about all this what you call the EMA lines for now. Just ignore them. Now, the basic indicator that I want to add is very famous indicator. Everyone must have used it, and you guys know about it. It's called as a stochastic indicator. Now, and the other indicator that I would like to use is to confirm my trade is an RSI indicator, relative strength index. So basically, I have added both of them. Now, I would like to change the settings a little bit. What is a stochastic indicator? What is an RSI indicator? They are explained very well in our training videos on our website. So please go and check those training videos. Now the length I will put as 5, the D ratio and the K ratio I will put as 3. As I'm changing them, you see these are also changing, and what it will do is it will just smoothen up my curve a little bit. That's all it will do. So now this is the stochastic indicator that I have this is the stochastic indicator, and basically this moves along with the market. Basically, stochastic is an oscillator. The market here, if you see, the market kept moving up, but the stochastic went up and down. Now, this indicator does not work very well when the market is trending. So very important. Market is trending. Don't use stochastic. Don't trade even. I will say why to trade when the market is trending? After 1 hour, after 3 hours, after 5 hours, come back after 5 hours. You will see the market is ranging. Then go ahead and trade the stochastic oscillator. All the oscillators they work good when the market is ranging, then the market is trending. Why? Because they are oscillators. Oscillators means which oscillate in a particular zone. In a pendulum, it has given a particular zone for the long handle to oscillate in that time, and then it moves the time, right? So that's the same thing happens here. These are all oscillators. So when the market is ranging, then the oscillators works really well. So this is my advice, that whenever the market is ranging, the oscillators will work very well. Now I want to change a little bit more. What I want to do is I want to add a couple of lines. I want to do this line as 95 and the upper line as 95, and I want to do the lower line as 5. And because I'm doing the upper line, when it touches the upper line, when it touches the resistance, what it has to do is it has to go down. So that's why I would take the line color to be red, because that means I have to do a put. I have to do a low on that one. When it touches the lower line, I want it to be a green because I want to do a call on it. So that's pretty much basically that is my setting of 9.5. And now what I will do is I will add 3 more lines. 1, 2, and 3. So the first line would be at 80. The second line would be at 50. And the third line would be at 20. Now, what happened here is I have created 1, 2, 3, and 4 zones. Now, if you want, you can write this down, but that is a suggestion that you can write this down. So, now basically what I will do is whenever it is in the zone of 80 and 95, I will not touch it. Whenever it is in the zone of 0 and 20, I will not touch it. But, and also whenever I will prepare my trade actually. I will not touch it, but I will prepare my trade here and here. Now, the moment it enters the 80 and 20 zone, or the moment it enters the 95 and 80 zone, okay, let's go one by one. The moment it enters the 5 and 20 zone, that I prepare my trade for a call. And the moment it enters the zone of a 95 and 80, I prepare for a put. So basically, that is the idea, and it's a 2 minutes put. It's a 2 minutes put or a 2 minutes call. If you are looking on a 1 minute time frame, it's a 2 minutes. If you are looking for a 2 minute 5 minutes time frame, it's a 10 minutes or a 15 minutes. So better go for a 10 minutes if possible, but 15 minutes also works. So, and also when you are a new trader, always try to aim for higher time frames. Don't go for short time frames. Always try to aim for a higher time frames. That is much better and much nicer to go for a higher time frames rather than smaller time frames. So again, whenever it is in the zone of 80 and 95, the moment it enters the 80-95 zone, I prepare for a put. Now, when I prepare my put, it has to have a nice curve going in, and then there needs to be a cross. There needs to be a cross between the blue and the right now it is blue and orange. So whenever it crosses, that is the first surety that I am going to place a put. The moment it crosses, it shows me the first surety that I am going for a put. And after that, it has to touch my 80 line. It has to touch my 80 line. That's when I will go for the put instantly in. So timing is very important since these are short-term trades. Timing is super important. So whenever it touches this 80 line, I will go for a put, and in the same way, it should go in to my 20 and 5 zone, and whenever it touches the 20, I will go for a call. Whenever it touches the 20, I will go for a call. So basically, what is happening is whenever it goes in, that means the market is they use the term as overbought and oversold, which is completely bullshit. Whenever the market is never overbought and never oversold, it's just that the oscillation. That means the buyer power, has here, the buyer power has to be take the it can be up, it can be high, or no, it can be low. So we don't know. We don't predict the market that way. We don't know how much power does the buyer has. We don't know how much power the seller has. But what we are trying to gauge is where the moment it crosses, that's where we try to understand that that now might be there is a possibility that the buyer power is finished and the seller power has finished and the buyer power is going to be increased. So that is what we are trying to gauge, and that is what we are trying to take. So so once it crosses and the moment it just give me one moment here, sorry. Sorry, there got an emergency call. So, anyways, what I was saying is, here you have to go. The cross happens, and then it starts a smooth curve up. That is which tells you, okay, now the seller power has decreased, and the buyers will are going to take over. Now, I have tried it other style also for a more shorter time frames like 2 minutes, 1 minute trade. Like 2 minutes is the shortest that you can, because 1 minute is very hard to gauge what the market move is going to be. So 2 minutes is much more of a safe play, I will say. So you can just bring it more down about a 15 level, and right here. If you see, right now it is going down here. If this has now, this also, if you include the stochastic along with the support and resistance line, that gives you a much more easier way to trade in a ranging market, because it's a ranging market, because you see this is a ranging market, and it's just an easy way to take the trade. So uh, looks like a breakout is about to happen. But since this was ranging and the price was denied many times on this at this price, so it's trying to go back up. It's trying to go back up. So we will see if the breakout happens. But the stochastic kind of entered in, but it did not go up completely. So it did not go in. So right now is the patience time. Like I said, patience is very important here. Now, this was a stochastic oscillator. Now, how can I make it more easier, or make the trades more confirmed for me, is by using the RSI oscillator. The RSI oscillator will also, I will set the time frames the same, and the length I will set it to a 6. So with the RSI oscillator now, it's the same thing that I'm going to do is, I'm going to add the lines here again of 80 and 20. Many people in the group are from the EOD group, and this strategy I have explained many times in the EOD group also. But some people have stick to it. Some people have just went out of it. So some people have jumped out of this and tried something else, something else. You can try as much as oscillator you can, as much as indicators as you can do. I will tell you the reason why the indicators will not work. why the naked chart is much better than any other indicators or any other arrows. When when the indicator or when arrow you are using is trying to see my word, sorry, what are those time frame settings? Which time frame? Time frame settings are up here: 1, 3, 5, 15 minutes. On a 1 minute chart, you take a 5 minutes, 2 minutes to a 5 minutes trade. Okay. All right. So now, see, now the resistance is getting there. It's breaking the resistance. It's breaking the support. Sorry, it's breaking the support, and it's breaking with a very solid candle. It's breaking with a very solid candle. Can anybody tell me what we are supposed to do? Should we take a trade here or should we not? Should we go for a 2 minute trade or no? Anyone? No is the answer. Well, what I would do is I would wait for this candle, because since the breakout happened, that means the sellers are taking over and they will try to push it up. The buyers will try to push it, but it's very rare that they can push it when there is a strong seller. When there is a strong seller, it's very rare that the buyers can or will be able to push it, because the moment they still try to push it, the sellers will push them down. So keep observing this kind of instances. I'm seeing on a live chart. I'm not seeing on a previous charts or anything. So, and if you see the history, what happened is whenever there was a high heavy sell, whenever there was heavy sell, and this one is a complete candle, this one is a complete solid red candle. So that means, and it has just broken the support. It just broke the support. So you know what happens then? When the price just kicked up, I would have taken a 2 minute put. I would have taken a 2 minute put. That's me, but you guys can take your own call on that one. But anyways, because this can be a distraction when you are when you're training, and you get some moments like this. It's very nice for them. So if you see, the RSI is moving up and down, the RSI is moving up and down, but my stochastic is nicely in the zone. No matter how much it happens, my stochastic is not saying that it's going to go up. Okay, my stochastic is saying, okay, the cross did not happen here. Now the cross has happened. Now the cross has happened. Now I will set up my call. Now I will set up my call. But I will set up my call. But what I have seen is just it has broken my support. So that is how I will avoid my trade. That is why I will avoid my trade. So this is very important. Like I can teach you the strategy, but the right judgment at the right moment is up to you. So you got to understand that is why I started with the support and resistance. I started with the range and the ranging market and the trending market. So you see this one tried to go up, but it was kicked back down, and the 2 minute straight up here would have been a good winner actually. Anyways, so it is right now I moved it to 15, but basically my point was at 20. So 20 is much more safer zone on both sides. So whenever it crosses okay. So I was saying the stochastic should enter the zone of 20 and 5, so that so also the RSI should enter the same zone. And when it enters the same zone, then together, when they enter the zone and when they together leave the zone, that is when I will take a trade. That is when I will take the trade. That is my more confirmation. following both of them together gives me around a 75 to 80% of success rate. So make sure you implement them together into the trade, into your trading, and also you draw your support and resistance line to help you um, gauge which way or which direction the market is moving and when to take a trade and when to avoid it. Because you're taking 2 minutes trade, every candle is an opportunity. Every candle, every minute is an opportunity. So don't rush yourself. Don't have the patience to wait for the setup to happen, and then you take a good trade. That is what good traders do. Any questions on this one? It's just the 533. The length is 5, the D is 3, and the K is 3. See, because of the breakout happened and with the solid candle, so that's why it kept on going down. So got to be very careful. And then it touched my another support also, and the another support was broken with the solid candle. Then it pumped back up, and the sellers are really gaining force in this one. Hey, this is called naked chart and live trading with price action. And also one more thing, when you see too much of flagging happening, like it goes down and then goes back up, then goes down, then goes back up, avoid that pair for that day or for that time of trading. It's much more safer not to trade that pair rather than trading it and losing. Any other questions? Breakout happened and then this one ended nicely again down. So whenever the breakout happens on a solid candle which does not has a wick, wick means this is the shadow of the candle is called as a wick. So whenever the breakout happens with the solid candle, you can be sure that the market is going to go in that direction. Now the market has started. Uh, Now the market has started trending again. It's going down. 5 minute chart for 2 minutes trade. No. 1 minute chart for 5 minutes trade or 2 minutes trade. 1 minute chart for 2 minutes trade. 5 minute chart for 10 minutes trade. Now I can do an analysis right here. Show you something. Trend line. So this is my trend line. Now if it touches and it has just now broken my trend line, but if this candle closes below my trend line, then it is supposed to go down more. But if it doesn't, if it goes up, then probably I will have a call opportunity for 2 minutes or 5 minutes. So there is still 16 seconds remaining. If it crosses below, then I will just avoid it. I will go to some other pair. But also here the stochastic is looking to diverge into the see, it did not break. So tells me I have an opportunity here to go for a call. Any other questions? We have only 11 attendees, out of which roughly. Any other questions here? Yes, RSI is a 6. You can actually also draw trend lines on the RSI. I'll show you how. Line. So basically, it has to touch and bounce back. If it is still a downtrend, it has to touch and bounce back down. But if it crosses, then the uptrend will start, or the upside movement will start. So right now it is crossing. Just as you say, and it happens. How beautiful is that? And I can show you why this started going up too, because there was supposed to be another trend line. There you go. Right here. So it was almost touching that trend line. Once it left that trend line, once it left this trend line up right here, see, all I'm doing is connecting the dots. 1, 2, 3, 4. If I draw the line and if it touch the line, boom, go up 2-minute trades. And since it crossed my upper trend line, keep going up, buddy. You have all the rights in the world to go up. Isn't that fun? Isn't trading fun? How many think trading is fun? That's right. That's right. See, with you could have just got some wonderful trades with this one. So believe in yourself, trade confidently, and trade well. That's the game plan. Any other questions before I stop my sharing and also stop the recording? Come on. Was it that easy? Kevin, you still on? Kevin. You see, the 2 minutes call wouldn't have been bad. It broke here. It was breaking here, right here. Somewhere here it broke that line here on the RSI. So 2 minutes wouldn't have been bad one. Yeah. Okay, so I think we are done. There is no more questions. So that's it for today. I hope you liked it. Try it as much as you can. And please post your results. Bye.